Hi everybody, Andy here, and you can see I've got Mark Barrett with us. Hi Mark.
Hello there.
Our tax expert.
Thank you.
And today we're going to be talking about stamp duty land tax.
Indeed.
SDLT. So we've got a nice little presentation going. I'm going to give a little bit of an intro onto stamp duty land tax, what it is, what it does.
Absolutely. So SDLT, stamp duty, actually now officially the second most hated tax in the country. Inheritance tax is the most hated. Stamp duty is second, raises £1 billion a month for the government. So it's very desirable for them, but obviously it's you and I that are handing this money out. So That's the topic for today.
Cool. Well, I've got your presentation up, so
good. Crack on. Those who've seen this presentation before, you've seen I'll do this introduction. Who are we? I won't stay for very long. I actually walk the talk. I am a landlord. I was a developer. The important screen. What I always say to you is I'm not providing professional advice today. What I'm trying to do is effectively tell you where the questions are, get you to have this in your mind. So at least if the situation is relevant to you, then you'll know to ask the right questions and go to your accountant, or if you haven't got a good one, come to us. Getting your timing right. And so it's a ridiculous question. Do you want to overpay your SDLT and claim it back? Or do you not want to pay too much at the beginning? It's a stupid question, isn't it? Nobody wants to hang cash out. So what's the process that we think you should go through? Well, you're in that strange situation now. The solicitor is the person that is filing this tax return. It is a tax return. They're filing it. You've got 14 days for them to file it. You've got to pay your tax within 30. Solicitors are not tax advisors, and you'll see that on their documentation, they absolve themselves of responsibility for tax advice, quite rightly. Therefore, what do we think you should do? Our clients are used to this. The process we use, when you've made 10 offers on property, one's been accepted, well done. Before you instruct the solicitor, so you've had the offer accepted, before you instruct, bring it to your property specialist accountant, if it's us, somebody else, and give them all the facts. And they'll go into a lot of detail about what do they want. And what they're doing is they're looking to say, well, is there the possibility of a relief? Now, there are 34 different reliefs from stamp duty. Now, either they completely exempt it or reduce the stamp duty. And your accountant will be looking at it to say whether they think there is an exemption that applies in your case or not. However, let's imagine you've got it wrong. You've just pressed ahead, and perhaps my presentation gives you a thought that you might want to go back and address this. You can, if you have overpaid your SDLT, you can go and repair your return within 12 months. Now, repair is quite important. It simply means you file the new one, right? You lay one copy on top of another. If you're beyond 12 months, however, you still can get a reclaim. It's a longer process. You've got to go through the rigmarole to do it rather than the repair, which is a more simple process. So you're not time barred on this one yet. If there's anything that comes out today that gets you to think about your SDLT, we can go back for you and try and get your SDLT back. Out of the 34 reliefs, I'm going to deal with 10. Now, I've got to say that I've been running this business now for 30 plus years. I haven't used the 34. Crown dependency property, I've never had to get that relief.
No.
So I'm going to deal with 10 of them, but these are the more common ones. Now, right now, we have this really unusual situation where the government, to try and stimulate the economy, try and keep the market moving, they've got this temporary reduction in the SDLT. Now, it goes to the 31st of March. You'll have seen, and you'll have been warned by your broker and your solicitors that they want to make sure you've got the stamp duty to pay if you can't get your deal through by 31st of March. And that's 4 months. And you think, well, why can't you get my deal through? But I know one of the London boroughs is now saying that they are not anticipating that they can get all the searches done in time. 4 months. We don't know whether it's going to be extended. There's a possibility of an extension to this. There's nothing's been said about that, as far as I'm aware, as of this morning. Saying which I didn't check this morning, but as far as I'm aware. But there are some other benefits to this reduction. So think about these as well. Let's imagine now you've got the property in your own name, okay? And your spouse is a lower rate taxpayer or non-taxpayer, and you're a higher rate taxpayer. You might be thinking, well, I wish I had put this property rather than into joint tenancy, which is 50-50 with your spouse. You put it into tenancy in common so you could put the percentages more heavily in favour of the spouse with a lower tax rate. Good. Maybe now's the time to change, because the 3% uplift doesn't apply to a transfer between spouse, and you've got this reduction period. So think about, do you have properties in your own name that you wish that you had moved some of the income, some of the asset to your spouse? We're doing this for a lot of clients at the moment, and we're going through their process of looking at them. Involve your accountant always. Can we just take that as read? I'm going to say that because you really do need to. You're also in the situation where if, for example, you've got a property or two and it comes within these limits, could you move them to your limited company? Now, there's lots of factors to take into play now. Obviously, we've got Section 24 has been worrying you because of your personal tax. Maybe you want to move it into a limited company, but you know you've got some CGT, got a remortgage, broker fees, legal fees, but also stamp duty. Well, maybe now's the time to look at moving these properties into your own limited company. Number 2, uninhabitable property. Do you all remember, have you been in this game long enough that you remember the Bewley case, January 19? It's only 2 years ago. The Bewleys won their case where they claimed back the stamp duty that they had on a residential property because actually it wasn't fit for purpose. All they were going to do was knock it down. And it was an uninhabitable property. Now, if you actually go back and look at the Bewley case, it was a fairly close run thing. HMRC fought really hard, really hard. But this property had asbestos, floors were missing, roofs were put through, all things, and it was in an absolutely awful state. The Bewleys provided evidence to say that there was asbestos there, you cannot live in it, it would be deemed unsafe to live there, etc. And they won their case. Now everyone jumped up and down and went, great. And I've seen gurus, I'm not that keen on gurus, said, don't worry about it. If there isn't a bathroom or kitchen, it's uninhabitable. Therefore, no, that's not the case. The reality was different. And HMRC clarified this, and there's the reference. So if you're thinking about, can I get uninhabitable property relief? There's the reference number. Look it up. I'm going to give you a lot of words on this slide now. There they are. I'm not going to give you time to read it now. Play back the video and have a read of that, and it tells you HMRC's opinion. Now, HMRC are not law givers. Legislation is a law giver. HMRC have to apply the law, same as you and I. But it does tell you whether you're going to have a fight, and is it worth the fight, and how big is the money, and can you afford the fight? Have a look at that another time. Okay, so what I'm going to do now, you'll be pleased, if you looked at the last one of these videos, these live broadcasts, my apologies. I had a lot of slides and I was banging through them really fast. Today, don't have any slides, but there's a lot of topics on each one. So let's just do a look at reliefs for investors. So multiple dwellings relief. Hopefully anybody who is into property understands exactly what multiple dwellings relief is, but I'll say it anyway. 2 or more dwellings bought in a linked transaction. I'll tell you how to calculate it, but let me first of all talk about linked transaction. So let's imagine you are buying a property from Andy, and you're buying a property from me. Well, Andy and I are not connected. We're not related in any way when we've got no connection. But if there was a sentence with our agreement put into Andy's contract and in my contract And in Andy's contract, it says, I'm going to buy this property providing Mark Barrett sells me his. And vice versa. In my contract, you'll buy my property providing Andy sells you his. You've linked them together. They are now linked. And if either one of them drops out, both drop out. Okay, so linked is important. Of course, normally what's happening is that you're buying two properties from the same person. But think of that in terms of, I'm buying one from Mr., one from Mrs. Could you make them linked? Well, if you do, what you're going to do now is you're going to take the value of the properties divided by 2, because there were 2 properties in this case. Calculate stamp duty on one property, on that half the value, and then double it. Now, what that does give you is that gives you that element that has a relief on it, because the first portion of your purchase price has SDLT relief. You don't have to pay any. So it's valuable to try and divide these by 2, especially if, using the example of Andy and I, the property you're buying from me is 100 grand, the property you're buying from Andy's 400. The stamp duty on his property will be a lot of money. On mine, it will be very cheap. Let's assume that you're an investor with your 3%. Combining them, making 2 properties on an average value of 250, lowers down your SDLT rates. You have to pay a minimum of 1%. So your SDLT is going to be a minimum of 1%. And if you have more than one property already, you have to pay the 3% uplift. So multiple dwellings relief, you should all know about it. If you haven't, I'll give you a potted view there. So let me give you the next one. Commercial. Dead easy. Let's imagine you're going to buy a shop. Well, it's commercial, isn't it? Of course it is. So you pay the lower rates of stamp duty that relate to commercial property. But if you're buying a property with a shop underneath it, you're buying flats, you're buying the whole building, it's got a shop at the bottom and flats at the top, well, the whole property is not residential. It's got an element which is commercial. Therefore, it's mixed. Mixed equals commercial. You're on lower rates. So very nice if you can start to identify that there is some commercial reality to this property you're buying. What I'm dealing with at the moment is, are you buying a property which is actually run as an FHL, furnished holiday letting? So is that commercial or not? Well, we now need to get into the identification of the property and the defining of the property. Maybe you can drop down to commercial rates. Let's give you the next one. Commercial rate, if you are buying 6 or more dwellings. At this point, you notice that I've now I'm using the word dwellings. So if you're buying 6 or more dwellings in a single or linked transaction, this is now deemed to be commercial. So I've done this for several clients where they're buying a block, and actually what they're buying in this single property, it's not an HMO, they're flats. Now I know that's going to affect your business rates, your council rates. I know it's going to affect that, but it's going to affect it anyway. These are flats, so they have the capability for independent existence. There's bedroom, bathroom, kitchen, somewhere to sit, and there's a lock on the door. All right, so you haven't got to go through anyone else's private space to get to yours. So visualize an HMO, but these are with bathrooms and a small kitchenette. That is a dwelling. So we're not talking about the property. Did you buy 6 properties? We're talking about, did you buy 6 dwellings? If you bought 6 dwellings, you can now use commercial rate. Now the interesting one with the commercial rate, so interesting to me, I'm a nerd, but anyway, interesting to me is you can, therefore, because it's 6 dwellings, go back to multiple dwellings relief, look at the word, multiple dwellings relief. You can say, well, if I used MDR, what would be my SDLT? If I used a commercial rate, what would be my SDLT? And you can pick whichever one of those 2 you want. Yeah, you can pick whichever one you want. So do them both. Remember what I'm saying? Take it to your accountant, let them work on it with you, identify what is the right one. There is a video on our website where someone who's very well known in the market was complimenting us on the fact that we saved them a huge amount of money by going through the process of looking at these dwellings and the definition of dwellings and making the case for the dwellings. Saved them a huge amount of money. What did it cost? I think we charged them 400 quid, 500 quid or something for the letter and all the work we did with it. It saved them 30,000 pounds.
There's a lot of this going on at the moment as well, Mark, isn't there?
Yeah.
Buying multiple dwellings, buying blocks of flats, and changing use of commercial property to residential or part residential.
Yes, and it is seriously valuable in terms of it's a good strategy, but also part of this is just managing our tax bill, not cheating the taxman. We're not avoiding tax. These are published reliefs that are available. As I said, there are 34 of them. They're all published. And it's identifying them and how to use them to your advantage. And when you're allowed, as you are, specifically allowed to choose one, good. We'll calculate them both then, and then choose the one that's best for you. Don't choose the one that lets the Exchequer put the biggest shovel into your reserves. Cracking on. We are pushing on with these today, I'm pleased to say. This one might sound a little strange to you as to why am I bothering with it. So, an employee has to move home for his job. Okay, visualize that story. If the employee is moving for work and the employer buys the property to enable the employee to move, then it's exempt from SDLT. All right. How do you apply that? Well, let's imagine you're living in the south of the country, by way of example, and your gold mine area is in the north of the country. You're charging up and down the M1, M6, whichever, and it's getting tiring. And you're saying, this business is going to work. I'm going to commit. I'm going to move. Well, it is feasible, therefore, for your company, assuming you're a company, your company to buy your house off of you and bring it into the company's ownership and rent it out. So there are people who are looking to move property into their company. If it's your home, then there wouldn't be CGT. Now we can move it in without SDLT as well. I've only used this a couple of times, but it is a standard allowed relief. So if, use my example, if you move into the gold mine area, maybe you can think about your own company buys your property off of you that you're moving from. Next one. Transfers between companies. Very important. Dealt with this. Andy and I did a broadcast on structuring your company where I'm talking about a group structure. So you have a group company at the top and two subsidiaries. One subsidiary might be your trade company, your development company, where you're doing flips, new builds, whatever, and your investment company. Let's imagine that you've created this conversion. You've got 10 flats. That was the example I think I used on that last broadcast. You've got 10 flats. You sell 6 because you've got to pay the bridger back. You've got 4 properties left. You can sell them. No problems. The development company, you can sell them to the third market. Or else you could sell them inside the group. You can sell them to your investment company using the group structure. Now, providing the companies are 75% owned, 75% is the magic number. It has to be 75% owned. So JVs 50-50. Sorry, it's not going to work. 75% owned. Yes, the development company is going to pay corporation tax on the deemed profits of market value. What's the market value? But there's no SDLT to move that property across to the investment company from your development company in a group structure. So that 75% is the one, please, to avoid tripping yourself up. There is a logic to 75%. It's beyond this topic. And if you get me started on it, I'm going to be even more boring. Chattels. Oh, please be careful. Please, please, please be careful. You're going to go and buy a house. You've agreed a price, and you would like to lower down the price because it would put you into another SDLT category, another lower percentage. I've seen gurus, accountants saying, yeah. Why don't we just pay £10,000 for that, the furniture that's in there. So there's your chattels. You're spending 10,000 on that. That's lowered your price down. Now we're going to lower the SDLT by lowering down your category. Do you think the taxman's not wise to this? Really? Now, I've got no problem with you buying chattels, but I want them valued properly. So if you're going to do it, please walk around the house with a video camera. Video everything that's in there. There's the sofas, there's the armchairs, there's the table, there's the kitchen table, there's the beds. Video it. Evidence the fact that it really did exist. And if you've got if all the furniture that exists is a knackered old divan and a settee, don't call it 10 grand. It isn't 10, it isn't. No one's that stupid. So be realistic with it and get evidence. Now, let's imagine that actually the house is furnished and the reasonable valuation is about 10 grand. Great. Then you look at it and say, well, I don't really want any. I would have paid 10 grand more for the house anyway. And you're going to dump that stuff and refurnish it. Well, that's very helpful because you have evidenced that it existed. You've evidenced that you paid for it. Now, when you start to replace the furniture, you can now claim replacement relief of the furniture. Again, those of you that remember, we had the wear and tear allowance was removed from us, the furnishings allowance. Now we can only claim for replacement furniture. Good. You bought some when you bought the house. Now you're replacing it. But please have the evidence, folks. That is really important to make sure that you've got the ability to protect yourself in 2-3 years' time if and when the taxman looks at you. Okay? So chattels, important. Be realistic.
Yeah.
So all of these are related to investors. I'm about to get to my final slide. And now I'm going to start talking about developers. Traders. Important. And I wrote that sentences on there. That's quite a longish sentence, convoluted. Quite carefully. Hopefully I've got it spot on. There are 3 scenarios where a trader, because it is a relief for trader, but the trader has to be a company or LLP. A partnership doesn't count. Own name doesn't count. It has to be a company or LLP. Now this, let me call it company, please. This company has to have been established for a specific purpose. And its purpose is to buy and sell properties. That's its purpose. Now, ideally, so we're talking about a flip company, aren't we? I'm now talking about evidence again. I'm talking about board minutes where you will have a document and it's board minuted and share the board minutes so that it's dated and timed that says, I'm getting into this business and what I'm going to do is. So be specific. Evidence your intent. So if you're going to buy and sell properties where the refurb prior to the resale is 10 grand or less, or 5% of the purchase price, but you can't spend more than 20 grand, that will be completely free of SDLT if this is your objective clause. You've got to put this into your objectives, your board minute. I'm doing this business. You're purchasing from the estate of a deceased person. Now, I'm going to spend a few minutes on each topic because I think it's quite important. What we're talking about is probate property. Dad's died. Mum and dad have died. The property's left. The kids are trying to sell it. It's gone through probate. What are we going to do with it? If that's your business, buying and selling that, I think there is an advantage to each of these 3. Now, normally I don't normally give this information out except to my clients. So I'm going to now let you into something I've done with clients. One of the biggest problems we've got as traders is where the heck do you find property at the right price? Okay, because Homes Under the Hammer and all those other silly programs, everyone thinks they're an expert and they can fix a property up and make a profit. It's dead easy. We all know that's not true, don't we? You've got to try and get to property before the market gets there. So you don't want to find it on Rightmove. You're trying to find it somewhere else And you're trying to find it from a person that's motivated to sell. So have a think about this. Who is the first person that knows that a person has died? Now, obviously, the hospital. They died in a hospital, one presumes. Who's next? The undertaker, because they're going to take the body away. So what I did is I created a silent salesman leaflet, just a leaflet. Maybe sorry, hear your terrible bad news. But if you're interested in selling properties, we make a business out of looking after the family of deceased people. So give me a call. And with permission of the undertakers, I left it on their coffee tables. I left my self-literature on the coffee tables. It's got to be done very carefully. You must upset people. Dad's died. The family have just gone into the undertakers, view the body, and make the arrangements. Yes, they're terribly sad, but they do know they've got a property to deal with. And lo and behold, there's a leaflet where somebody looks after these people and buys property quickly. Very useful way of getting to a motivated seller and potentially getting the right price before it goes on the market and it starts getting gazumped up.
It's quite clever as well, because it's actually hitting a. It's like with all marketing, if you can hit a problem, if people have got a problem, you can put yourself in front of them when they have that problem.
Yep.
It's a really clever way of actually putting it in place, but also, because it seems a bit morbid,
It really, it does. You've got to do it really
carefully. Sort of vibe to it, but the bottom line is it isn't at all. It is solving a problem that is, facing them at that point, and
yes.
One of the things when a family member dies and you've got this house and you literally don't know what to do with it, you're not going to live there. That it has to be sold. It probably has to be split between people and all that sort of thing. There's loads of family politics that is going on.
Yeah.
And having that could be just the thing that sort of another weight off my mind,
Well, and it is a weight off their mind because the family members, however many inheritors there's going to be, some of them might be really desperate for the cash, so they don't really care what the price is. They just need the cash. Some will be getting very sentimental about selling the family home. You've got to deal with it really sensitively. I'm not speaking for a moment, and if you could imagine Mark Barrett being sensitive, I really was, I really have been to these people because they've got real problems.
Yeah.
Okay, let's give you the second one. Now, this one is a little bit more cheeky. I'm not quite sure whether to explain it or not, but I will do. Okay. You've got to be if you're in the business of repairing a chain. Now, this is for cash buyers. Folks, this is not for mortgages. So it's only going to be relevant to a very small number of people. Let's imagine the market's moving, there's a chain, 8 houses. Great. No one can move until everyone moves. You know how the chains work?
Yeah.
Great. Some bloke in the middle of the chain, something happens, whatever it might be, and the chain is broken. Now, if you're in the business and you've got the ability and you've got to deliver, your reputation's on the stake now, on the line now, folks. You've got to deliver on this one. If you're in the business of repairing a chain, then by repairing that chain, holding it, selling it, but don't spend any more than the 10 grand, 5%, blah, 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 you can buy the property without stamp duty. Now, think about this. That property has gone through every search possible. The solicitors have done everything. All the buyer's packs are ready. The seller's packs are ready. Everything's done. Literally, all you've got to do is walk in with cash. Okay, and you can buy that property. Now, you go through an estate agent. You can't go to all of them because how much cash do you have, folks? If you say you're going to do it, you better do it. Your reputation's on the line. So go to a few, not many, estate agents and say, if ever you get a chain that's broken down and you look like you're going to lose the sales, I'm sitting on cash, I'll buy. All right? Subject to the property being the right property for you, and it's got to resale value.
Yeah.
How much of a hero are you to that estate agent whose fees are now sitting on the line?
Yeah, I mean, it's not just a hero, but you're actually enabling them to to earn very good money, especially if they've got a few properties in that chain.
Yeah, absolutely. And not being funny, you're the guy that's walked in with a cape on. You know,
Yeah.
you're Superman. You've just saved a huge amount of money for them. Now, now you become a person that is trusted by that agent to say, oh, damn, there's a problem. I will go to you because I know that you'll stand up. You're a good guy. You've done it before. You've got the cash. You're ready to rock. Now, of course, you're buying cash. You're going to sell it. You've got to be a trader. We're not mortgaging here, folks. You're going to have to sell this. And it's going to be free of SDLT. So your price is lower, isn't it? There is an argument that says, well, I wonder whether everyone else in the chain will take a couple of grand reduction in their price as well. Now, that's mean, nasty. I'm not encouraging it, but you know it happens. Okay? Repairing a chain, very important. Also, you get into a motivated seller. These people are motivated, the chain's about to break. And you're getting property cheap, and you haven't had to go through all the legals and searches and everything else because it's all been done. So motivated and saving money at the same time. Let me give you the third one, and this will be the end. I'm trying to keep this one to half an hour, which I don't normally do. I have done quite well so far.
You're doing all right.
I'm doing well. You purchase to enable a relocation. Now, let's imagine, I think it was the BBC, don't imagine, I think it was the BBC who moved from London to, is it Solihull, Salford.
Salford, yeah. Salford Keys, yeah.
Yeah. So you've got all these people who live in London who are going to relocate. They don't want to commute London to Salford Keys. Damn, there's an awful lot of properties suddenly coming on the market. Now, if you are enabling relocation, you can buy the property SDLT free. So you've got to have these as stated objectives. You can't be mixing this with lots of other stuff. These are your objectives here now, folks. This is what you're going to be doing. So don't say, oh, well, I bought 1 out of 7 and one of them was. No, that's not your business. That's not what you're doing. Okay? We're talking about having a specific objective here. But I think it's got great marketing potential as well. So we're trying to get the property before it hits Rightmove, aren't we? Before it hits Zoopla. Good. We'll go to the HR department of the BBC. So once you hear that the BBC or whoever is in your area is relocating, go to the HR department. Tell them you're in the business of enabling relocation. Give them hopefully some background stories about you that are true, demonstrably good. And say, fine, so if any of your staff are having a problem with relocating, we'll step in and we'll enable this for you. I'll buy the property. I can't spend a lot on it because I'm not allowed to, and I'll hold it and I'll sell it. So I'll take the pain of the time, but your person can move. By the way, how motivated are they? What's the price? Can the price be reduced? So you've got to a marketplace where the rest of the market doesn't know that the property is available, and you've got a motivated seller, and the employer is probably motivated as well. Can I see a deal emerging here? So traders, this is important, but do it properly, please. What I don't want you to do is do this and then find we've got a problem later on because you tried to mix and match different bits and pieces together. I was talking about this at a round table meeting, and very experienced property entrepreneur was at the table and was kicking heck out of me. Will you stop telling people about this? This is how I've made all my money. I don't want everyone else to know how to do it. Sorry about that. It's what we do. This is how to make money. No SDLT, motivated sellers, marketplace before it gets to the market. Wow. So SDLT really helping you here as well if you're setting up. So whistle stop, and I've done that in 33 minutes, which is a record for me because it's normally 45. It's only meant to be half an hour, but I normally overrun. And that's 10 out of the 34 topics on relief from SDLT. Engage with your accountant. They'll have if they're property specialists, they will know the rest of them. But I've given you 10 that might well apply to the average or fairly normal trader or investor. So hopefully that has been helpful to you.
Excellent. Excellent. Yeah, thank you very much, Mark. What we've also got to sort of recognise a little bit, I guess, is that the all of this is sort of tied into that other broadcast we did about company structures and everything else. What I'll do is I'll dig that out and I'll put the link into this because we've got it in Pin Community, so it's all in there. Yeah. I'll put the link into that so people can see that as well, because it's important to understand about this concept of the company structure as a baseline piece of information. All the stuff that we're doing now is related to that. So these are sort of strategies and techniques that you can use after the fact. But if you really got to look at your company structure and really got to talk to someone like yourself to make sure that you're getting it right from day one, really.
Well, I think every broadcast that you and I do, and hopefully, folks, you're realising Andy and I put a fair amount of effort in before these, because actually everything's all connected. The last presentation was how do you extract cash out of your company. One before that was how we're going to structure your company. This one is about how can we use your company in a certain way that we can reduce another tax bill. We did one on VAT. Everything is connected. So the big thing for me is planning and having that clarity about what it is you're trying to achieve. Now, it's really tough. I do understand if you're new, just starting out, you've been to the Mastermind Accelerator, you're super excited. You say, fine, I've got 15 different ideas coming out my ears and I want to do all 15 simultaneously. Well, tough. You're not going to. Wean it down a bit, but start to plan how this is going to look longer term. And it's long-term planning now. Get your structures in place now. See where this company comes in with SDLT. See where that comes in with VAT. See how these things all intermix. And everything is intermixed. And it comes back to the last presentation. How the heck do you get your cash out?
Yeah.
So all of these things, everything is interconnected. But it is because it's all relevant to you running a business, not a hobby. This is a business.
Yeah, brilliant. And as usual, you got your we've put your email and
thank you. There's a contact details there.
The email is really for some just a quick conversation, some basic advice, an introduction, a chat.
Yeah.
This is not a full 10 grand service for nothing. It's don't take the mickey time. But yeah, so if you've got something that you think that might be it might be useful to talk to Mark about, maybe structuring the businesses and looking at some of these sort of things, then just email him at that, or you can give the company a call.
Always. As you can tell, I enjoy chatting, so.
Yes, yeah. Well, it's good. I like it. I like it. Listen, Mark, thanks very much for that. That's absolutely fantastic.
Great pleasure, and nice to see everyone again. Bye now.
Yeah, and looks like we might be coming out of COVID at some point. So.
Yeah, I looked at the tier levels. I looked at the levels today as to whereabouts am I in the sequence. I think I'm at number 7 in the sequence.
Yes,
so I think it's March.
Well, long as you're still here, that's all. I'm
not old enough, and I'm not ill, so that's okay.
Yeah, I'll sort of fit in the same sort of structure, I think. Yeah. Listen, Mark, brilliant to talk to you again. Thanks very much for the information, and we'll see you again in a few weeks' time.
Take care now. Bye-bye.
Bye-bye.